Do you want to build your first Forex trading strategy that actually works and doesn't rely on random signals? In this video, I'm going to give you my step-by-step guide to building a winning Forex trading strategy using TradingView indicators. By the end of this video, you'll know exactly how to analyze the market, find high-probability trade setups, and manage your risk like a pro. Before we dive in, this video is for educational purposes only. I'm not giving financial advice. Always practice these lessons on a demo account first, because trading is risky and I take no responsibility if you lose your money. Now, let's get started. I recommend you to watch some videos about the RSI and EMA indicators before watching this video, especially to understand buying and selling signals. And also, in case you just want to see some examples of entries and exits in TradingView, then skip ahead towards the end of the video. Let's move on.
The first step to building any strategy is to decide where and how you'll analyze the market. I focus on two key concepts: support and resistance, and smart money concepts. Support and resistance levels are areas where price has historically reversed or stalled. Think of them like invisible barriers in the market. For example, if price bounces off a certain level 3 or 4 times, that's a strong support or resistance. Smart money concepts, on the other hand, look at how big players, banks and institutions move the market. They often create liquidity zones, manipulate price, and then move in the opposite direction. Here's how I mark these areas on TradingView. I zoom out to a higher time frame, like the daily chart. I use the horizontal line tool to mark the price levels where price reversed multiple times. I also mark imbalance areas. These are gaps where price moved very quickly, leaving no structure. I do this because these areas are where the market is most likely to react again. Once these levels are drawn, I'll refine them on smaller time frames. Now that we have our key areas of analysis, we need to decide what time frame we'll actually trade on. So let's move on to the next step.
Time frames are critical because they define the type of trader you are. I personally start my analysis on a higher time frame, like the daily or 4-hour chart, to see the overall trend. Once I know the trend, I drop down to a lower time frame, like 15 minutes, to find an entry. Here's a quick way to align multiple time frames. Look for the overall direction on the daily chart. Are we trending up or down? Then, check the 4-hour chart to confirm the same direction. Finally, look for an entry on the 15-minute chart that aligns with the bigger trend. This keeps you from fighting the market. Remember, trading in the direction of the higher time frame trend increases your probability of success. Now that we know our time frame, let's define our trading zones, which is where we'll actually plan to buy or sell. Trading zones are simply areas where price is likely to react, giving us potential trade setups. These zones are often around support and resistance, or supply and demand areas. Here's exactly how I draw them. I look for areas where price made a sharp move away. This indicates strong buying or selling. I highlight the base of that move using the rectangle tool on TradingView. This zone acts like a magnet. If price returns there, it's often a good place to look for trades. Later, when we talk about confirmations, I'll show you how I combine candlestick patterns and indicators to know when to actually pull the trigger inside these zones. But first, let's break down what confirmations to look for. Now we have our trading zones, but entering blindly is a recipe for disaster. We need confirmations. I use 2 types of confirmations: price action and indicators. For price action, I look for patterns like bullish or bearish engulfing candles, pin bars, or multiple rejections of a level. For indicators, I love the 50 EMA, exponential moving average, to see the trend. If price is above the 50 EMA, I prefer buying. If it's below, I prefer selling. I also use the RSI, Relative Strength Index. If RSI is oversold near a support zone, it's a potential buy signal. If it's overbought near a resistance, I look to sell. On TradingView, I set the RSI to 14, default, and I keep the 50 EMA line clean and simple. Once we get these confirmations, it's time to set the most important part of your trade: stop loss, entry, and target. Let's go over that next.
Every trade needs a clear plan. Here's what I do. My entry is usually right after I get confirmation inside my trading zone. My stop loss is placed below the last swing low if I'm buying, or above the last swing high if I'm selling. This way, I'm only wrong if the market structure actually breaks. For my target, I look for the next support or resistance level. I always aim for a minimum reward-to-risk ratio of 1 to 2. Ideally, you should aim for 1 to 5 when you're more experienced. I consider important to always have the largest reward-to-risk ratio. This keeps the odds in my favor. Once you've set your entry and targets, we need to calculate how much to risk per trade. Let's talk about that now.
This is where most traders fail. They risk too much and blow up their accounts. Here's my rule. I risk 1 to 2% of my account per trade, never more. To calculate my lot size, I use a simple formula. Take your account size, let's say $1,000. If you risk 1%, that's $10. On TradingView, you can use a position size calculator. There are free ones online. This makes it simple. Now that we know our risk, we need to have rules for managing trades once they're open.
Trade management is all about protecting your profits and cutting losses fast. Here's what I do. Once price moves halfway to my target, I move my stop loss to break even. If I see the market slowing down or reacting at a key level, I sometimes take partial profits, like closing 50% of the position. I never move my stop loss further away hoping the trade will come back. That's how traders blow accounts. Having clear trade management rules means you're never guessing what to do during a trade. Now let me share the indicators I use and how you can set them up on TradingView. My go-to indicators are simple but powerful. 50 EMA for trend direction, RSI 14 for overbought, oversold conditions, volume profile to see where the biggest buying and selling took place. I also like a free indicator called Supply and Demand Zones on TradingView. It automatically highlights key zones, which saves a lot of time. To set these up, go to TradingView, click on Indicators, and search for each one. Keep your chart clean. Don't overload with 10 indicators. It only causes confusion. Now that you know the full step-by-step process, let's wrap this up. Now, let me give you a real example of how I use these indicators to enter and close trades. Let's say we're looking for a buy trade. Trend confirmation, I check the 50 EMA first. If the price is above the 50 EMA, it tells me the market is in an uptrend. RSI confirmation, I then look at the RSI. If it has recently been oversold, meaning it dipped below 30 and is now curling back up, this is a sign that buyers are stepping in. Zone confirmation. Finally, I check if price is reacting inside one of my marked support zones or supply-demand areas. If all three conditions line up, I place a buy order. For example, if price pulls back to my support zone, touches the 50 EMA, and the RSI crosses back above 30, I enter a buy trade with my stop loss just below the zone. Now, for a sell trade. I confirm price is below the 50 EMA, which means we're in a downtrend. The RSI is overbought, meaning it's above 70 and starting to turn down. Price is inside a resistance zone or a supply zone I've marked. Once all three match, I enter a sell trade with my stop loss just above the zone. Closing the trade is just as important. If price hits my target, the next resistance or support level, I take full profit. If RSI shows extreme exhaustion in the opposite direction or price breaks through the 50 EMA against me, I'll close early. This combination of EMA plus RSI plus zones gives clear, rule-based entries and exits, which means no guessing. And that's my complete step-by-step guide to building a winning Forex trading strategy for beginners. You've learned how to mark support and resistance, pick time frames, define trading zones, use confirmations, manage risk, and set up indicators.
Thanks for watching, and remember, practice everything on a demo account first and trade safe.